what's going on, guys? That are here back with another video. Thank you so much again for being here. Today we're gonna discuss how to use psychological levels, what a psychological level is, how to spot them, how to use them to pretty much understand the structure, to know where you're standing, right? And take action after that. Okay, either selling or buying, whatever decision you want to make, you know, based on psychological levels. Why am I doing this? Is because lately, you know, that because the markets has been pretty much acting like it's there are more fundamentals than technicals right now involved into trading because of all that is happening right now. You know, you have the war in Ukraine, you have the inflation in the United States, the earnings report. All, you know, there's a bunch of fundamentals going on right now that is causing the markets to move, sometimes very violent, you know, either up or down, whatever direction, sometimes very choppy, which is completely the opposite. Like, it's very, very hard, and like for a market, you know, if a market is choppy, it's very complicated to do something, to make a decision. Is it going to buy? Is it going to sell? You know, it's just going up and down, up and down, up and down, you know. So with this, basically with this, finding these psychological levels, we're going to understand how the banks trade, okay, how the big institutions trade, and what they normally do, and this can actually help you to perhaps swing trading, you know, to do swing trading. It may not be for scalping, it may actually be for like swing trading, holding entries for longer. And you can use this in, you know, pretty much anywhere. Okay, you can use this in pairs, you can use this in commodities, in gold, even stocks. If you're trading stocks for some reason, micro stocks or something like that, you can definitely do that, right? In this case, I will show you a few examples right now, starting with pairs. Then, yeah, I'll show you some other examples on indices, but it's very simple to understand and see how the market moves. For example, a psychological level, for those who don't know, it's basically a rounded number. Okay, what is that? If you look on the right side, for example, right now I'm on the weekly time frame on Euro USD. If you look on the right side, you see those rounded numbers. Rounded numbers is that, I mean, is like, for example, 1.30, right? 1.28, 1.26. You're not seeing some more decimals right here, like 1.28267, right? You're not seeing all those. Those are basically rounded numbers. So what we're going to do is try to see where the market is positioned right now. Where the market is, like at this point right now, the market is kind of like right here. We're gonna when you actually put the mouse over right here, basically at this point, you know, at the bottom, you're gonna look at the right side. You see what number we're looking for, right? So you can say that, okay, so the market is about 50. Let's try to look for this psychological level right here. That would be 50. So I'm gonna put that line in there, and let's see. That's it. I just marked this psychological level. It's a rounded number, rounded. I'm not using 1.08316. You see? So I'm using a rounded number, right? If we go in the past, now at that point, you see that that number is actually been acting as a nice resistance, nice support, I'm sorry, right? So this is like what, the third or fourth time that is coming back to this level again. So that's making me think that, hey, now, and because I'm on the weekly time frame, you see even right here, this was in 2015, last time it was here. Oh, the last time was actually on 2016. So you see that the price, once the price normally comes back to this level, it normally bounces, right? Every time the price comes back to this level, it bounces up. So right now, you might say right here that it's a good position to buy. It's an interesting zone for buyers to get in control in this area, right? So what I'm gonna do, I'm gonna try to highlight 3 areas. Okay, this is my first psychological level, first. Okay, And now I'm gonna go from this point, I'm gonna go up and see maybe the closest one. I would go maybe with this one. Every 500, depending on what you're trying to do. For example, this would be the next psychological. So I'm going to be moving every 5,000, for example. You see, this is 1.05, 1.10. Now the next level would be what? 1.15. So every 10, or every 5. See, for example, here. Right, I'm going to highlight it. Here, right? So you have the 1.05, 1.10, 1.15. So every 5 or 5,000, you know, I'm going to highlight those zones right there. You see what I just did, right? Every 5,000. Let's go on a bigger time frame like that. You see that coincidentally, those levels that I just draw, every 5,000. Look at this. The market is ranging pretty much from all the way to the top, and the market is actually reacting to these areas very much. You see that is reacting. The price broke that structure, pulled back, retesting the psychological level, and then pushing back up. You know, so it was ranging pretty much between the 0.50, the 1.05, and the 1.15. The market was consolidating pretty much for what? How many years? We'll say from here. No, from here, sorry. It was pretty much 910 days. So that's about what, 3 years or so. This was on 2015 and 2017. That's when it actually got out of that consolidation. So hey, yeah, big consolidation right there. Now right here where we are now, we can go, you know, smaller time frames just to have an idea. Let me remove this thing that I was just finding out. So right here, I'm gonna highlight those areas much more stronger. I'm gonna put a much bigger line so we can see it. This is the line that I just draw. This is the second line, and this is the third line. Right? So where are we right now? You see that the price went all the way right here from this psychological level. The price broke, came back up to retest it twice, doing some type of double top right here before coming back down and going all the way down to the next psychological level, which is the 1.10, right? The price went down, was creating a flag, boom, it broke that psychological level and breaking the flag as well, and the market just went down to the next psychological level, which is this one. So let's see what's going to happen in this area. It's because, of course, we're drawing a channel right here, and it's looking like a nice channel. This type of buy right here, it's starting to see pretty interesting right now, because we are in a very strong psychological level. Doesn't necessarily means that the market will go up. No, not necessarily. The market can break to the downside like it did previously, like it did here. You know, if the news are still bad, whatever that's happening, you know, between Europe and USD, you know, and the United States, you know, it can affect. So in this case, we are touching a psychological, and it's been struggling right here a lot to break to the downside, even touching the actual channel. So you see now you can use this in your advantage. You can even, because pairs, of course, they move differently. I would say a little bit more slow than indices, and maybe finding a trigger here, or finding your entry point, or you just want to go on a buy aggressively just because you are in a psychological level. There's a more risky thing to do, but you can do it. Like, why not? This is, as I mentioned, you are at a psychological level. It's a very strong support in the past. If you go on a weekly, you remember the market, every time that it was reaching this area, you see, it was just bouncing back up. Okay, not necessarily means they will do it again, no, but it's a very strong support. It's a very strong support, and the market could bounce. The market could also do a trap, right? The market could pretend is maybe, I don't know, breaking to the downside, you know, cleaning stop losses, and then maybe all of a sudden, who knows, is finding the actual support right here and then start pushing up. That could also happen, okay? You have to be ready. You have to understand that all those scenarios can happen, okay? So this is basically it. This is how I like to draw my psychological levels. If you go in the past, as I mentioned, coincidentally, those areas, the market does show reaction to those areas. Let's go to another pair, for example, here. This is the Euro NCD, right? So let's see where the market is right now. I'm going to go with the horizontal line. Let's see where the market is right now. 65, so 64. 65, I like this type of number. The 65, it's a rounded number. There we go. I just placed it in there. So it's a rounded number. You see that the price reacts to those levels. Once the market reaches to those zones, it acts really nice as a resistance, also as a support. So the 65 is the nice psychological level. So 5,000 after that, where's the next psychological? The next psychological level will be the 70, right? Let's see, put 70, hold on. 1, 2, 3, 4. All right, that psychological level, and maybe at the bottom, maybe going lower, maybe the 60,000. Right here. Okay, at least those three areas. If we start breaking to the upside, I'm going to highlight the next one, which is 75 in this case. And then 80, 85, 90. You see, looking for rounded numbers. Okay, that's how the banks normally aim for. They're not just going to be looking for for example, you go 5 minutes. They're not going to be looking for 1.64, 761. Oh, let's go ahead and buy all the way to 1.64, 962. You know, they're not going to be doing that. They normally just, once they are buying, they normally go and they aim for a rounded number, a psychological number. So right here, for example, you can see this nice trend. The price was struggling here to break above this psychological level. A lot of struggle in this area. Finally breaking, coming back, retesting, and and the price broke. Where is it? Hold on. The price broke right here very strong and ended up reaching the next psychological level. So you can take this psychological levels as take profit areas. Okay? You can also look at it like that. Like if you see the market breaking very strong, the 70,000, 1.70,000 on Euro NCD, right? You can maybe go in aggressively, or if you spot some type of trigger, and aim the next target. Doesn't necessarily mean that we'll reach it just like that. No, okay? You have to find still your confluences before you jump in, okay? But normally, as I mentioned, the banks will try to reach the next psychological. You see that right here, the market is going up, right? It broke this psychological level of 1.65, right? It broke it. And then it started just consolidating. But once it was on top right here, the market just ended up pushing up and reaching the next psychological. So you can perhaps do that. Once it breaks, you can aim your next target right here. This will be like your last TP. Let's say, just an example. This is just an example. It doesn't mean that you need to do it. And it shouldn't be like that. But let's say you enter on a breakout to the downside. You place the stop right here, and you go all the way down here, right? So let's say between those, try to aim at least, TP1 halfway down and TP2, right? So, or try to put maybe TP1, TP2, TP3, right? Try to put at least maybe 3 take profits if you want to do that, right? In case you enter on that breakout, the price is coming back. Same here, the price broke below, you put the stop loss above, but it's just a raw example, guys. This is just a raw example. So let's say you want to do that as well, and you want to take profits partially once the market keeps going down, maybe TP1, TP2, TP3, right? So you can do that as well. So those are basically those psychological levels. Those are take profit areas for you to swing trade, because if you look if you measure from here to here, this is about 492 pips. This amount of pips, 492 pips on pairs, this can take, look, like for example, all this consolidation, look at all this consolidation right here. How long it took the price from the moment it broke above the psychological level to the moment it hit the TP? 61 days. 61 days to reach 492 pips. You see why I also like trading indices? Because you can get this amount of pips in like just 10 minutes, 15 minutes, really quick. But in pairs, for this amount of pips, it can take, you know, a few months, maybe sometimes years. If you're lucky, like for example, this massive crash right here, okay, maybe you reach it in what? Maybe a few hours or a few days, just maybe a few days, 2 days. So it went down 475 pips in just 2 days, okay? That was a lucky strike. Also, this drop right here was a lucky one, but not all the time is going to be like that. You see the market ended up breaking here and reaching. How long it took from this breakout to hit the TP? 15 days, right? So this is basically for like swing trading. If you like swing trading and you like trading pairs, for example, you can definitely do that. Let's try to look for another pair, right? Just an example. Oh, this is some type of setup that I'm having right here. But let's try to look for those psychological levels to see where they are. See where we're standing right now. 43, maybe 45. Let's go with the 45. I like that 45 number. Hold on. Let's see, 45. That would be maybe one level. Let's go on the weekly. Okay, so looking nice right there, 45. And then maybe 50, about here. Okay. Right, and maybe let's go higher. Let's go to the next psychological. 55 would be 55 about here. All right, so let's go. I'm on the weekly. If you go in the past, you can see that those areas, they do show reaction in the past. Those psychological levels, rounded numbers, they do have a lot of reactions in there. Sometimes the market goes up, it starts consolidating. Look at this nice head and shoulder right here. Price struggle and then crash. But it does show a lot of rejections in those areas. So those are target points for the banks. That's where the banks aim for. So let's go smaller time frame, right? So this right here was, for example, it was a nice setup. This type of sell right here, you see what's happening, right? Well, the market pretty much is skyrocket, almost from this psychological level all the way hitting the actual 1.50 right here, right? The 150. So after rejection, after hitting this, the market started to come back down. Also, don't forget about your support areas. Besides the psychologicals, you're always going to find, of course, your support and resistance. Some other areas, there not necessarily has to be that rounded number, okay? Don't forget about those zones either. So not just because those psychological levels are there, you're going to forget about another's support and resistance. No, you have to pay attention to everything. So the market did pull back right here, it dropped, breaking that little zone right here, right? And then came back up. So this was a really nice sell opportunity. I had drawn also this support in this area, and I remember I did send this, I believe I sent this sell to the free group on my Telegram. If you're interested, by the way, you can check it out. The link is in the description below. So the market dropped, pulled back. This was a nice area to sell because the market is now rejecting it. You saw the first sign, which was the rejection of that psychological level. Price then broke a previous support and resistance. It broke it, came back up for retest. I'm in the golden zone. I was using the Fibonacci, you know, from that high to this low. I'm in the golden zone, and I just decided to send the actual signal in there. The stop a few pips above, and TP all the way down to this area, at least to this area. It did go down. How long it took? Took about 2 days and 4 hours, and this was about 206 pips. Okay, sometimes you're gonna be like that. You're gonna be, you know, you can play around and understand price action and understanding where you're standing. This is why I always say this. You have to understand and know where you're standing If you are in a resistance, you should be looking for for sales. I'm sorry. If you are in a support, you should be looking for buys around this area. So buys, sales, okay? But not just because it's reaching that level, I'm gonna go on a sale. No, okay? Don't do that, because the market, look what the market did here. The market looked like it broke. So you wanted to go on a sale right here. Why would you go on a sale? You're not even seeing some type of, retest. And even right here, it could have played you out. You see, not all the time is going to work. The market can still be very volatile because of something. So let's say you wanted to go right here. The price broke, came back up for retest, the psychological level, and dropping a big, beautiful bearish engulfing candle. That could have been the entry. You may be aiming to this target. Well, look at what happened. The market just immediately, skyrocket, and then after that is when it actually dropped, right? So stop you out, maybe stopping a lot of people out right here, going very, very up, very strong, cleaning stop losses, and then going to the downside very strong. So this type of traps, they will happen. There's nothing we can do to prevent that. They will happen. Let's go and check, for example, Nasdaq. Okay, another example on Nasdaq. You see that I like having, in this case, a Nasdaq every 1,000. So I go 14,000 psychological, 15,000 psychological, 16,000 psychological level. So those levels, I know that they are touched, and the market does react that. If you want to go, for example, between the 14,000 and the 15,000, you want to also highlight maybe the middle of that, which is the 14,500. I am sure you're going to find another reactions in that zone. There we go. On the 14,500, in the middle between those, that's another psychological. So you can also use that as well if you want. That's another area. It's a nice psychological level the market does react to as well, to the 14,500, right? So that will depend, guys. You can do at this point, play around with this, okay, as long as is a rounded number and it makes sense where you're standing. Let's go to Bitcoin, for example. Again, what's the psychological levels? The 60,000, 50,000, 40,000, 30,000. Because the market has recently shown signs of a breakout of this channel, plus also rejection on the 40K, I'm going for this thing, and I'm betting that the market will pretty much reach the 30K right now, based on this psychological levels. Okay, so since the market has been showing signs pretty much of continuation to the downside, and now the breakout of this flag, it gives me that confirmation. So it broke the flag, plus also went down and it struggled a lot to go above the 40K. So now it's going down. So remember, the psychological levels pretty much on cryptos are exactly the same. Let's go, for example, Ethereum, right? Ethereum, it would be, let's say, 2,000, 3,000, every 1,000 and going up. You can also highlight the middle between the 3,000 and the 4,000. Maybe go with the 3,500, right? Let's see. And the 3,500. There you go. You know that area, it shows reaction once the market reaches that type of area. You see, nice support here, nice resistance. Okay, you can also use that. Between the 3,000 and the 2,000, you can use the 2,500. Let me clone it, 2,500. Right? And there we go. You have a nice support in this psychological level. So let's see if the market will bounce right here or will break it and go back to the 3,000, to the 2,000. Let's see what's going to happen. But at least you understanding, you're drawing those rounded numbers every 1,000 or every 500, depends on what you see in the area. But as long as it's an actual rounded number, you will see that the banks are actually aiming to those areas. Those are target areas. Okay, let's go to gold. Let's go to gold. Gold could be something like that as well. So you got 2,000, maybe, because this one is, it's a little bit different. So you got 1950 and then 900, right? So every 50, I would say every 50, it is a nice level, every 50. So all those areas are nice support and resistance, right? For example, the 1950, it's a nice psychological level. The market did react this right here, very, very nice, doing that double top and then dropping. The 1900, it's a very nice psychological level for gold because it does show reactions in there. It's been acting as a support, resistance, and so on. You can go lower than that. Then after the 1900, you can go to the 1850, right? Then after the 1850, you can go to the 1800, and so on. You know, you have those psychological level, rounded numbers, okay? That is basically it, guys. A psychological level. Oh, by the way, let's go to a stock. Let's go to a stock like Tesla. This case, let's go on a weekly, you know, in the bigger time frame. So let's try to highlight those areas. Let's see a rounded number right now on Tesla. Maybe the 900. Let's say the 900. 900. Okay. 900. It's a nice psychological right here. It's a nice strong level. You can go after that maybe to the 800. Depends on what you want. Let's go first with that. Every 100. Every $100. Let's see. Right. And let's go now above maybe 1,000. Right. Just an example. Right. Nice 3 psychological. Let's go now a smaller time frame. I'm on a 4 hour, and let's see. The market tends to react to those levels. The same. If a stock, for example, is showing rejection or strong rejection at a certain level, and it starts pushing up, you know that most likely will try to reach the next level. Okay. If we were on an 800, you know the next target will be the 900. If it starts breaking the 900, the next target will be the 1,000. If it's coming back down, if it's forming some type of bearish flag and now starts breaking the 1,000, oh, you know that most likely we'll be aiming for the 900. That's how the banks move, how the big guys move, the financial markets, the financial institutions. You see that the 1,000 was a nice strong level, was right, a nice strong support in the past. But then once it broke, it ended up breaking that thing, or every time it breaks it, you see, it tends to go down. Things to actually go and reach the previous one, and then it goes back up. So retest it again. So retest. A lot of a struggle above the 1,000. The market did reach. Let's see, 1,100. Let's see the 1,100 here. And then 1,200, which was one of the highest. It went over 1,200, right? So that's basically it. You know that even looks like a head and shoulder right here in this one, where you see every 100. That's a nice psychological level on Tesla. Let's say you wanna also pay attention to a middle point between every 100, maybe every 50. You know. You can highlight another zone. So right here, you see that that's another psychological level. Every 50, 900, 950, 1,000, 1,050, 1,100. So you see that is also this level. It did react right here as a nice resistance, and the price came back down. So if you are scalping, for example, or depending on what you're doing now, when you scale in, you know where you are. And you see those big lines right there, those are psychological levels. So you can make a decision. Oh, I'm below. I'm just starting to go below the 900. So I think I'm going to start looking for sales right now. It's just an example, right? If the market starts breaking above the 900, okay, I will consider maybe looking for buys in this area, right? So it will all depend on what you're looking for. But using those psychological levels, knowing that you can actually aim your target, that could be maybe part of your target to those areas, It's important. It's important to understand they are there, okay? And if you start using them and pay attention to those psychological levels, believe me, you're gonna start also seeing a change on your trading, okay? You're gonna be like, okay, yeah, it makes more sense because the banks or the big institutions, they tend to aim for rounded numbers. They don't aim for aim the final TP to the 975.07. No, they they just go, okay, take it all the way to the 1000. Boom. It's easier for them. It's just a rounded number, right? So, with that being said, that's basically it, guys. You can use this as I mentioned. This is how I draw my psychological levels. This is how I use them. You can use this in anywhere. You can use them in pairs, cryptos, stock market, commodities like gold, oil, all of that. You can definitely use it. All right. It's your job now to practice and keep practicing until you pretty much kill this thing. Alrighty, that will be all for today, guys. If you're new on the channel, please subscribe. I do post content here very often. I try to post videos every single day. This week has been since it was my birthday and it was Mother's Day here in my country. It's been very hectic, doing a lot of things for the family, and so I did miss a few days without posting videos, but I do try to post videos every single day. Follow me on Telegram as well. I do have a free Telegram group there if you're interested. I do post here and there setups for pairs, for indices as well if you're interested. If you also want to check out my bundle, you go on the website teamprofitsenglish.com. You will find information there based on my that I'm offering a bundle which includes a course, a mentorship, and a VIP signal group for life. Okay, if you're interested, just check it out. Thanks again, guys, for watching. I'll see you in the next one. Take it easy, guys.